Hey guys, Akil Stokes here. Welcome back to another Weekend Trading Edge video, your weekly look around the markets where I share a few of the top trading ideas that are on my radar for the week ahead. My apologies for missing you last week. I was busy running around the world doing stuff, but I hope you enjoyed the content that I put out and I hope it cured your hunger. This week we're back with a normal episode and I've got some cool things to speak about. This week, not only are we going to look around the forex market, but we're going to dive into a few stocks. I put some poll questions out there on the Trading Coach Podcast Instagram group as well as on the YouTube channel about should we look at these stocks. You guys responded, so we shall oblige. I also want to talk a little bit about some potential Japanese intervention and how that may open up a massive trading opportunity. And for you guys who stay to the end, you'll get to hear all about that. As always, if you do me a favor, support this channel. One, hit that like button. Do it right now before you forget. Subscribe if you're new. Lots of cool content, the weekend videos, the midweek videos, and the daily short videos. And share this on your social community. That way we can spread the word. We can keep getting cool ideas. And I can keep creating new content for you. Lastly, if you ever have any questions or comments, leave them in the comment section below. I do read through each and every one, and I do respond. Speaking of which, that's one of the reasons that I want to take a look at the stock market this week, because one of the comments that I got was, hey, Akil, how do I do technical analysis? I see you do technical analysis for the forex market mainly. How can I do it for the stock market? And I want to make the point that technical analysis is a skill. It doesn't matter what market you're trading. The chart is the same, right? My mentor always told me if you were to erase the watermark, if you were to put a little notepad on top where the symbol or the ticker is, you wouldn't know what time frame we're on. You wouldn't know what asset we're trading. So I don't want you guys thinking that you can only use technical analysis for this market or you can only use technical analysis for that market. It is all the same. And the classic price patterns that form in the market, well, they form across the board. Now, one thing I would say that there are little intricacies between markets and even between stocks within markets or pairs within markets, right? So don't think that you can just take one strategy that works on one thing and it's automatically going to work the same on something else. For example, I mainly trade the forex market. And in the forex market, I take a counter trend approach, mainly because the market consolidates about 70% of the time. However, when I jump to commodities like gold, or if I'm investing in an index like the S&P, I'm much more of a trend trader because those assets tend to trend more than they consolidate. Doesn't mean that you can't do the other version in each of the markets. You could be trend continuation in Forex. I do that as well. You could be counter trend in the stock market. I do that as well, and I'll show you that in a little bit. But you want to understand the path of least resistance. That way you can kind of establish a hierarchy of your trading strategies or your money management tactics within those trading strategies, all right? So let's hop in. And we're going to start here on Nvidia. If you've been anywhere near the stock market, if you listened to the podcast episode I did on the AI bubble, you know that Nvidia has been pretty popular as late. We also have earnings coming out this Wednesday, I believe. So it's going to be a stock to watch this week. But we're not going to get into the funny fundamental stuff. We're going to stick to the technicals. And what I see here on Nvidia is this. You can see on the weekly chart, we have finished the week with what's called an inside bar, right? And what an inside bar means is this. This current bar, most recent bar, is our inside bar. That just means that it's a bar that completed completely within the range of the previous bar. So here's the high water mark of the previous week. Here is the low water mark of the previous week. So this is the range, the distance between the high and the low. You can see this bar completes, completely inside of it. And what that means, just from a mental or visual perspective, is it means that the market is consolidating. The market is going sideways. The market is taking a pause. And automatically when I see that, I look to take advantage of consolidative techniques, one of which is going to be advanced pattern formations. As we work our way down to the daily, right, it gets a little junky and funky. We can see it here. We can even go one more time frame down to the 4 hour, but we can see that amongst this junk, or at least I can see it because my eyes are used to reading gaps and whatnot, we have a potential pattern formation forming. If we take our initial move right here, right, the high, right, this double top right here, this the right top, so the second top of our double top, I should mark that out for you guys if you're new. This is our double top here. We go up, we brief retrace, we come back up for a second top. This is called a double top. Once again, it is a classic price action pattern. You will see this in all markets, and it means the same thing. It means that price tried to rally up. We came to a point of relief, which is normal. We retraced off of it briefly, and then the bulls tried to make another run at it, and they failed miserably, right? Not being able to break and close above the previous high water mark. And then we saw a reversal right down here. Oops, wrong tool. Right down here. I like to team this with divergence as well. So if I bring up this little squiggly wiggly at the bottom of my chart, this is my RSI, and you can see just the difference here of how price action is making equal highs essentially, and our RSI is not doing the same thing at all right here. This is called divergence. It is a clue that the market may be ready for some relief. Another clue, and I don't want to say the common trader, but we talk about this in the live room a lot. This is the only reason I'm bringing it up. For you guys out in the live room, and I warn them, don't think about this because it makes your brain all mushy. It's from a book that I told you guys never to read. I don't even know where it's at over here. This one. I'm going to show you this. I may blur it out, but it's this book. Never read this book. It is witchcraft. There's voodoo magic in here. It doesn't have if you go to Amazon and check it out, the cost of this book says your soul. I sold my soul for profits. Hey, look, many of these YouTubers are selling their soul for lies and other scams. So like to sell my soul for trading related profits, that's not too bad in comparison. But it does teach a method of using the RSI that's non-traditional, and I'll simplify it as much as possible. If I put a line here on, I'm going to make this on the 60, right? We call this the RSI zones, right? If I put a line here on the 60, and I put a line here on the 40, and again, just this is the most simplified version of it, because I don't want you guys getting weird and overwhelmed, right? If you do get overwhelmed, guess what? I just dropped a great Trading Coach podcast episode talking about how to deal with being overwhelmed. So that is the video right before this video. Check it out. That's a great plug, right? But pretty much when price action goes below this this 40 line down here, that is a signal that that bullish trend has come to an end. If you're looking for another dip below, as long as we stay below this 60 line up here, that is a continuation sign for that bearish trend, kind of just to make things short and sweet. But back to the main point, because I get distracted easily. We have our move down here. This is going to be called our X leg. I'll use this so you can actually read it. Nope, that's not what I wanted to do. This is going to be our X leg right here. This move down here is going to be our A leg. That is the first move of a potential advanced pattern formation. We then have a failed extension up like this, right? A little brief retracement. That is going to be our B leg. Now, what I want to do here is I want to take my Fibonacci retracement tool out. I want to measure it from the high of my X, the very high, the wick, to the low of my A, the very low, right? And I want to see where that B leg comes to. And depending on what ratio it comes to, that sets up what pattern I'm looking for. For example, if it would have come only to a 50% but not hit the 618, I would be on alert for a bat pattern. It did hit the 618, so that switches it over to being on alert for a Gartley pattern. So I now have a Gartley pattern on alert. We'll kind of go through this quickly for the rest of it because I don't want to make this a 30-minute video. This is going to be our C leg, right? Another failed extension to the downside. I'll move this up so you guys can see it. And then for the Gartley pattern specifically, I'm looking for a move to the 127 Fibonacci extension. So taking my Fibonacci extension tool from up there, starting at my A, dragging it to the high of my B, and back down. And if price action were to go to this 127 level right there, I'll erase this other stuff, that is going to put me on alert for a Gartley pattern. So it's something that looks like this: swing high to swing low, X to A, first retracement up, A to B, failed extension down, B to C, move to the 127, that's my CD completion, and the zone of reversal, right, is going to be from that 127 to the X leg. So if price action comes into this magical zone that I just drew in, then what I would be looking for is a potential short-term short. Very big emphasis on short term, right? This isn't a full reversal. We're not looking for a full bearish breakout, just a short-term move back down to about right here, right? So again, earnings coming out for Nvidia this Wednesday, the 19th, I believe, so keep an eye on that. But as long as we work inside this period of consolidation, which is pretty common before earning periods, this could be a opportunity to take advantage of inside that consolidative period. Next up, we are going to head to Microsoft. And if you're someone that's saying, Keel, patterns never happen on stocks, they're only forex, and everything you said in the beginning of the video was false, I want to do something really cool for you, right? I'm not gonna say anything, but I just want to do this. And I want to see what happens if I just do something like this. And right, beautiful bat pattern just formed here on Microsoft. Same deal, we've been in consolidation here, and in consolidation advanced pattern formations form. Again, this wouldn't be necessarily the ideal way to trade stock markets as a main strategy. Maybe you could, I don't know, but when you get stocks that are consolidating or any assets that are consolidating, advanced pattern formations are a great way to take advantage of them. They've been a staple of my trading for over a decade and a half now. They're not flashy, they're kind of boring, but they make the money, so it's fine with me. So what we have next here on Microsoft is very similar to what we looked at in gold during the week. You guys don't know what that is because I didn't put the video out, sorry. Live room members, you guys do. But what we're looking for is pretty much the next violation. I'm gonna go one more time frame down to the 4 hour. And you can see that price action essentially came to retest the lows of our A leg down here. So we ran into a previous level of structure support and we bounced off of it. We haven't necessarily double bottomed yet, but we put in kind of a double type of bounce. We came down, we came up, no technical double bottom, but we came down again. So we can't look for a buy here on a double bottom because that never existed, and we are rule following traders and we shall not break them. But similar to gold, what I would look for is this if you are someone that's looking for longs. Look at the highest retracement right here. So this peak level right in there. Look at that as being a decision point for you. If price action can violate that level, meaning break and close above that level, then there's a good shot that we can continue up. Again, not looking for any type of massive continuation here, but we could look for a short-term move higher on Microsoft if you are someone that's looking in the bullish direction. Now, from a fundamental perspective, Microsoft is interesting. We had some pretty decent earnings that just came out. And when I say just came out, they came out at the end of last month, but within the last like 20 days or so. However, you are seeing the stock market drop, not stock market. Well, the stock market, yeah, we are seeing the stock drop here. And the question is that a Microsoft company thing, or is that more of the whole AI bubble fear thing that I told you about before, that 55% of you guys voted, yes, it is scary. And that's going to be the main question that you have as an investor. I think we've seen a lot of relief in stocks. I'm always one that bets on strong companies to kind of survive and thrive even when other things may be pulling them down. So again, if you are someone that is looking for a buying opportunity without being able to get involved at the lows here, this is going to be your best bit of confirmation that we may go back up to retest those highs. Obviously, if we break this level to the downside, that's where your stop should be. That's where you want to be like, hey, let's kind of reevaluate for the next opportunity. Next up, I want to visit the Loonie Dollar Canada. And I wasn't going to look at this because I have a thing, right? I'm superstitious about looking at trades that I'm currently in because I believe that whenever I look at a trade that I'm in, it goes bad because the market wants to scare the heck out of me and give me every temptation to bail on my system. But it's Saturday morning. The markets are closed. So I guess it can't move. It can, but I won't see it move, so it's not as bad. But anyway, you'll remember this video from last week. I'll put a link in the description box below explaining it, but it was one of those videos where we talked about using a counter trend trading approach to enter a trend continuation trade. And I may clip this in here. No, I'll just tell it to you. We had a good conversation in my live trading room this week about how this trade was going. So long story short, I entered on the double bottom right here. And you can see right after I entered, the market gave me a little bit of positive movement and then did completely nothing and we drifted sideways. And a week ago, and again, I'm sorry to plug all these videos, but like you want to be familiar with the channel because a lot of the content that we do kind of builds on each other. And a week ago, we put out a video talking about the graceful exit. It was a 3-part series on or a 2-part kind of conversation on that about a technical strategy you can use to bail on trades when the market shows you that's not going in your favor. That was one video. The other video was also about understanding if that's something that fits your personality, because it's very hard to bail on something and then go on to see it win. And we were looking at this trade throughout the week, and it was not going in our favor. And it was a good conversation about sticking with the trade, sticking with your guns, sticking with your analysis until you're proven wrong. And if you are proven wrong, you lose, and you already banked in how much you would lose anyway. And the market has responded off of that level. In no way am I yet positive about this trade, but I could be. And this is where the new setup comes in as well. If we look at this, this is going to be like a funky looking head and shoulders pattern. I'm not sure if it's easier seen on the hourly, maybe not, maybe on the daily. Maybe not that either. But essentially, we're looking for the same thing that we did on Microsoft. The key point, which would be positive for this trade, is a violation of these highs, right? This is the peak of the double bottom. The violation of that peak is a positive sign that the double bottom is likely to work in your favor. We did not get that at first, but we came up to retest that level and put in some new high water marks, right? Now we're consolidating a tight flag right up here. And if we can violate, meaning break and close above this level, that is a positive sign that price action will go to where we think it is going to go, which was right here and even further beyond for that bigger target we explained. Now, again, if you're a new trader, I would not advise buying it right now. There's no sign that the bullish move is likely to happen. Rather, wait for that break and close above, right? It's another question that we had about a trader asked, Akil, when you pick spots and buy or sell, isn't that gambling? And one, yes, trading is gambling. The difference is as traders, as professional traders, we're gambling with the edge, right? So we're working in probabilities, but the probabilities are in our favor. Where traders that are doing random stuff, it's like going to the casino and betting random numbers, right? The probability is not in your favor, so you ultimately lose. As traders, we're exploiting an edge, which has been proving and tested in the market to say that, hey, this thing works in our favor more than it doesn't. But specifically when we come to the charts, we're not just making predictions and buying or selling. We're doing something called being predictive in our analysis, reactive in our execution. So if you notice how I phrase this, I'm saying that, hey, I'm looking for longs, but price has to show me that it's more likely to go long first. Now, what's that signal going to be? For me, it would be a higher high, higher close above this level. So if price action gives a higher high, higher close above that level, then I'm looking to get long, whether it's on a breakout trade where I buy right away or waiting for the next pullback to come down and buy on the pullback. So we are waiting for that clarity from the market before getting involved, and a higher high, higher close above this level would provide that here on dollar Canada. I'm going to get away now before I jinx it and tempt fate even more. Now, before hopping into our main event about Japanese intervention and the big massive trading opportunity that it may give you guys, I want to give you guys one more reminder about a massive trading opportunity that you don't want to miss. End of November, 25th, 26th, 27th, 3-day online trading workshop. Last I checked, we had 400 seats filled, which means there's probably only like 100 left. Register now. It's a game-changing event if you plan on doing something different in 2026 than what you've been doing so far in 2025. So link in the description box below. Check it out. Register now. It costs you less than 2 cups of coffee. And enjoy 3 days of trading education, great community, and cool mentorship with myself and Jason Greystone. Now, let's talk about this Japanese intervention, right? And before you go running for the hills, right, understand that intervention does happen, right? It's not a weird thing that you should fear. It happens all the time, right? And in this particular intervention, what Japan is looking to do is they're looking to do like a verbal intervention, like a threat. It's called jawboning. We spoke about this in the recent Trading Coach podcast episode about the reopening of the U.S. government and how the markets have been going wild because everyone's happy again. And jawboning is essentially this, right? Japan wants to stop their currency from getting weaker against the dollar, right? The magic number that's been floating around is the $1.55 mark, which you can see on the chart here. We're trading right at or right above. And what they want to do is, instead of just actually intervening, they want to whisper some threats into the market. They want to say, pss, 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 hey, we're not going to let it go above 155. Oh, 155. But they want to throw this 155 number out there in order to intimidate and scare us as traders. Because again, if you hear that intervention is coming at 155 and you're a dollar yen bull right here, you're probably a little bit cautious at buying at 155 or buying this close to 155 because you're like, hey, I can get myself into trouble. And the hopes is that it scares enough people in the market that we see the market collapse again. And we've seen this a few times, right? I'll throw up some charts of like the 100 billion times that Japan intervened. But if we just take a look here on, maybe I want to go to a weekly chart. The last few interventions or verbal interventions that we had pretty much line up with our highs, right? We had one right here. We had one right here. We had another one right here. And then we had some more like back in, I think this area, 2011, 2012-ish, if I remember correctly. But you can see the last few times it happened. Actually, I think this one, maybe this one, I believe. I don't know. I didn't check my numbers on this, but I remember it happens a lot, right? And you can see each time it happened, we did get these little responses, right? We got a move here, we got a move here, we got a move here, we got a move here. So it wouldn't surprise me if the market does respond the same way. Something else we have here from a technical perspective is a very interesting pattern that lines up with that, right? You can see that recently, we've had a nice little floor here on Japan, right? We had the start of our floor back here in late December 2023. Ooh, that was Christmas, look at that. Then we had another test of that floor and a hold in September 2024. And then we had another hold recently here in April 2025. So we've kept steady those lows. However, at the same time, if you look at our highs here, these intervention dates, we've put in lower highs, right? Now, who can tell me the name of this pattern? Dun, 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 dun. Pause the tape if you need time to think or cheat. This is called a descending triangle where we have lower highs and equal lows. And typically what we're looking at in a descending triangle is going to be a breakout to the downside. Now, I'm not that optimistic in a strong enough yen to break out to the downside. I'm not that optimistic in a strong or a weak enough dollar, especially with the market now flooding away from the anticipated rate cut in December to more of a hold. That's been very interesting. We went from like 90% all the way to like 60 or 40% right now of what the market thinks is going to happen, despite Powell telling us back in October exactly how he felt it was going to happen. We were just very optimistic about things, and now we're finally getting a reality check. But that's another story for another day. But regardless of that, if you're interested in a descending triangle, right, there's three ways to trade it. There's the before, the during, and the after. The before would be positioning yourself right here as we test this upper trend line, and in positioning yourself to take advantage of this move back down to that level, which is a pretty significant move. We're looking at, again, 155 to close to like 141, something around there. Another one would be to wait for the breakout. And again, this is thinking forward a lot, but to wait for the breakout, as you spoke about in the last example, and then wait for the pullback into that level, and then a chance to get short right here. And the third one is playing the breakout to the downside. Now, again, I'd be very cautious about playing the breakout to the downside. I just don't see that happening. But I do think this can be a pretty cool move to take advantage of from this area up here down to retest this previous level of support. So we'll keep an eye on this as we continue throughout the year in future Trading Coach podcast episodes. Trading Edge episodes. I'm all over the place. Too much content. Sorry. But we'll watch this space. And again, if you have any questions or comments about it, just leave it in the section below. Hope you guys enjoyed. Remember, hit that like button on your way out. Share this with your social community. And again, I want you guys to be involved. So if there's anything that you want me to take a look at throughout the week or in next weekend's video, it could be an actual trading opportunity. It could be a subject. I know I got a lot of questions on anchored volume profile, which I plan on doing a video for. Now that I said it, I have to do it, but leave them in the section below. I want to give you guys what you guys want to see. Speaking of which, I always get a lot of questions about trading computers. I'm not an expert, so I can't answer it for you, but click this QR code or link in the description box below. It will take you to an expert who will share with you everything you need to know about what needs to be included in a trading computer. And if you want information about trading software, what platforms to use, that's another question I got throughout the week. There's a link in the description box below to a Trader Coffee Break episode Jason and myself did about the best trading softwares and apps for beginners. So everything you need to know is on this channel. So stay here and take it all in until your brain explodes. All right. Hope you guys enjoyed your weekend. Enjoy your weekend. Until next time, plan and trade your plan. Take care.
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.